You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Larry Reaugh, President and CEO of American Manganese. On the web, you can find them at AmericanManganeseInc.com. Larry, welcome back.
Well, Jim, I'm glad to be here. We're seeing a little winter weather, but that's to be expected.
Well, yeah, the first major snowfall for Vancouver in 1,000 days. We were due. Larry, the last time we talked about the Uptick rule was April of this year. Since then, the junior markets have been somewhat buoyant without an Uptick rule. Larry, have you done any recent articles on the Uptick rule?
Actually, Jim, I haven't done an article since Dan McGarty out of Washington, D.C., and I jointly did an article that was published in the Vancouver Sun here in Vancouver and on the Mining Journal website around the world. But we haven't done an article on that. I've certainly, though, kept in contact with my shareholder base about what the Uptick rule is all about, the fact that there is no Uptick rule, and kept them informed about that.
What effect has shorting without an Uptick rule had on American Manganese stock prices?
Well, you've seen the volatility in our stock. I mean, we've traded 250 million shares in 4 months. That's a B, quarter of a billion, 260 million actually. And that's a lot of stock to go through. We've gone from beginning of the year at about 1 cent to a high of 38 cents. But, there's something that's been holding the stock back. With that kind of buying frenzy, you'd expect the stock to have been much higher. But not there being no Uptick rule, of course, it's like blood in the water for predator traders when they see this kind of volume to come in and trade, a penny or two. Some go in for daily profits, and others go in to try to drive the price down to make a huge killing, and that's probably what we've been seeing here in the last couple of weeks.
What can shareholders do to protect themselves?
Well, the only thing a shareholder can do to protect himself is to, first of all, to recognize and accept there are no short rules or Uptick rules in Canada. So there's no regulation on it, and, to understand that these guys have a certain formula which they operate by. And if they are aware that you might be coming out with good news or something like that, they can gang up and do a lot of selling to make that news look like it's bad. But you have to reckon as a shareholder, rather than get spooked out of stock that you paid 30 cents for and sell it at 25 cents, the smart thing to do is to go back and look at the company and see what solid progress the company has made. And we've made some very solid progress. So the due diligence should be done on the company. Look at the press releases. Look at whatever other information that we have out there. And look at those before you start believing the blather on the billboards. Naturally, predators are not going to be talking good about the management or the company or its process or any other thing. It's all going to be, they're going to zero in on certain things. For example, there was, in the last month, there was 700,000 shares sold by insiders. Nothing was said about the fact that one of those insiders bought back 450,000 shares. But they made the implication that the company, the management, and the directors did not believe in the company. But, directors are like any other shareholder out there. They have to arrange, before the year ends out, certain tax, accept certain tax gains or losses, and that may require buying or selling of shares. Or they may need money, in the case of a company that was starving to death for 5 years, which was Amy. There's a need for money because nobody's received anything that's worked on it. And So they sell some shares, just like any other shareholder. I mean, out of $260 million, the amount of stock that was sold represents 0.3% of the total sales. Is that detrimental to the company? No. But the perception that the predators want to make out there is that we're bailing. I mean, gee whiz, out of probably the insiders hold about, totally maybe 25 or 30 million shares with some of the people that are also on our advisory board. And, 700,000 shares is not a lot of selling. I'm not making excuses. I'm just saying that this is going to happen off and on. Markets come and markets go, and people have immediate needs or long-term needs, or maybe they've been borrowing money to support the company, and they want to alleviate those bills by paying them off, and they may sell some stock. So that is in itself, as I explained it, does not appear to be a big thing, but it certainly can be blown out of proportion on the bull boards. And this is, basically what the predator wants to do. He looks for any sign of weakness, and then he goes for it. Now, remember, anybody that's a shareholder isn't going to be in there, knocking management and the process and and the Amy company itself. This is predator trading. So the shareholder has to basically look at the reason he bought the stock to start with. And eventually, the company will reach its goals, and that'll increase the value of the company. And you have to remember that short traders now, especially the longer-term short traders, are putting themselves at risk. If there's 10 or 20 or 30 million shares short on the company, most of it undeclared, then what happens if something out of the norm happens? And I'm not saying I know anything out of the norm that's going to happen, but potentially we're in a hot area. Something could happen at any time, and but that's a hypothetical. Then they'd have to cover, and they could get badly burnt. So the greater risk now is in selling stock you don't own in a company that has a great technology on its hands than to buy the stock, because eventually, it will be recognized in the marketplace.
What can companies do to protect shareholders?
What we can do is we keep going and diligently moving the company through its milestones. We've got other things to do. We want to make sure that our patents are solid. So we've got some test work to be done. That'll be coming up very soon. We're going to be implementing that. And that will keep us busy for the next, keep the company management side busy, just being able to cross the I's and dot the T's and make the patent foolproof, and that will be an ongoing situation. So there'll be news coming off of that. And, of course, we just got back from the NatBat, and we've exposed the company to a good cross-section of the people that should be interested in our recycling process. It's getting to be more and more that the company will be emphasizing the fact that, yes, we can, it appears that we can recycle cathode material, that, yes, there should be a demand for it out there. Less and less companies are looking at making wall units out of them, which is just a stopgap. Eventually they have to be recycled. So when you look at the environment, if you want to basically say that the company is, or the companies that manufacture batteries and EVs are conscious of the environment, but if they're not looking after their waste in a prudent manner that recycles those cathode materials, then that kind of lays a lie to what they're doing. So they have to start getting serious about recycling. And I say that because when I was at NatBat, my impression was that companies were basically not paying the attention that they should for the recycling aspect of it. That was my impression, and that we did get a good reception. We did have a lot of people coming up and talking to the Cometco folks, and also to myself, and that, in itself tells you that, hey, we're on the right track. And what comes out of the NatBat? Well, you may be seeing some of that today and the sudden rise of the stock, but I don't know. And but I do know that anybody that's going to be interested in us is probably want to be an owner of the recycling shares, or they'll want to. The company itself will want to eventually own a part of it or all of it, and so we just keep moving diligently ahead. Don't lose our focus, and as I said earlier, people shorting the stock are putting themselves at greater risk than the people that buy the stock. I mean, the stock is certainly much more advanced and worth a lot more today than it was when it was 38 cents. We didn't have the patents applied for or anything like that at that point. Now we have, and which gives the company a nice security blanket to move ahead with what they're doing. And that's all the company can do. We can't change the regulations. The regulations are such that there are none. And reporting of short positions, well, I think that's up to the company. When a company trades 260 billion and there's 1 million shares, or 250 million shares, and it's obvious that the volatility is caused by trading back and forth, and that's shorting and buying and shorting and covering the shorts and on a daily basis, and also the long-term shorters are hoping that they can grind the company into dust, and for my personal opinion, is that I can't see that happening anymore. We've crossed that barrier. So I think being aware of what you're up against in the market is crucial. I started talking about this and with you, Jim, I think about 4 years ago, and even a year ago, people were getting glassy-eyed when I talked about it. They rather than go do their own due diligence on it, they just took it as bunk. But now you're seeing that the light is being shone on a lot of these short players, and it's specifically coming off of the major exchange, Toronto Stock Exchange. There's been articles out there that have been exposing the short trading. So I expect that at some point there will be regulations coming back in. Certainly they didn't put these regulations back in the 30s for no reason, and it helped lift the market off and helped them get out of the recession. So, or the depression, I should say, and so the same thing is going to happen here. But I think, and I'd just like to take this little opportunity here to wish my shareholders a very Merry Christmas and a prosperous New Year. And I think that we've got a tiger by the tail, and we'll just keep hanging on to that tail and trying to steer the tiger.
Larry, thanks for chatting with us.
Thanks, Jim.
My guest has been Larry Reaugh, President and CEO of American Manganese. You can find them on the web at AmericanManganeseInc.com. You're listening to HowStreet.com radio. If you have any questions for us, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.